In this video, we will look at what's in store for 2021 in the housing market. We will look at the data, and at the end, I will give you my opinion on our local East Bay market as well as the rest of the nation. Hey guys, if you're new to the channel, my name is Mac Rogers. I'm a real estate broker here in Castro Valley, California, in the East Bay of the San Francisco Bay Area. Thank you for tuning in and Happy New Year. Happy New Year! 2020 is anything but normal. It seems like we've been down more than we were up. We have a health crisis that turned into an economic crisis, a very contentious election, civil unrest. Here in California and the rest of the western states, we had wildfires, while the other side of the country experienced floods and hurricanes. When it comes to real estate, it's a different story. We know one thing to be true. The real estate market not only met expert predictions, it actually surpassed them, breaking records along the way. At the beginning of the pandemic, I told all my buyers that there will be a 3 to 6 month window that I believe they can buy a house with very little competition. Boy, was I wrong. It lasted for all of 3 weeks. After a truly scary March and April, where everything was at a standstill, we just took off like a rocket ship and we haven't looked back since. With that in mind, there's one glaring question right now. Will the housing market in 2021 follow the same trajectory, or are we headed for a big crash? Yeah, I mean, fair question, right? Prices continue to climb while our economy is at a standstill and our unemployment numbers are still high. Let's take a deep dive into what leading real estate experts are projecting for 2021 so you have the knowledge and confidence you need to succeed to make your decision in the new year. Let's talk about interest rates. Interest rates are projected to stay low. That seems to be the consensus right now. This was and still is one of the biggest drivers for this year's booming real estate market. We continue to have record low mortgage rate. Because of this, affordability reached one of the highest levels it has in the last 30 years. This is even after a 15% price appreciation from last year. Everybody wants to get in on this and not miss out. So where are interest rates headed? The good news is that experts are predicting that the mortgage rates will remain low for the foreseeable future, possibly the remainder of 2021. Now, there are actually a couple of predictions out there that are saying that it might go lower. Now, I'd say that this is not likely, but if you asked me in 2019 if the rates were going to go lower, I would have told you not likely. I think at this point, nothing is off the table. While home prices continue to appreciate across the country, low mortgage rates have made purchasing a home increasingly affordable, especially for first-time home buyers. This trend, like I said earlier, is expected to stick around in 2021, continuing to drive a very competitive market. If we do get a rate increase, it will most likely slow us down a bit as this will affect affordability. Moving to home sales, what do we have in store for 2021? Well, home sales are projected to grow by 7%. If you thought that there were a lot of buyers this year, experts said just wait until 2021. This 7% increase is predicated on two things. There's thinking out there that there are a lot of homeowners that are holding off selling because they are afraid or hesitant because of the pandemic. Because we're seeing some clarity, i.e. the vaccine, or just gaining more understanding of the virus, the belief is that more homeowners will start selling. While I know of people that are actually holding off selling, I don't think that this could be a big enough number to affect the number of inventory to hit the market. One other thing that actually concerns sellers is the fact that they might not be able to find a replacement property for themselves. This is particularly true for people here in the Bay Area that are either wanting to upsize or even downsize. The second thing that this increase in sales is predicated on is brand new homes from builders. More inventory will be a welcome change from the last year. Now, this could certainly be a difference maker should builders ramp up construction, especially for first-time home buyers. Let's move on to home prices. This is, after all, what everybody is really concerned about. Home prices are projected to appreciate by another 3 to 4%. Simple case of supply and demand. When high buyer demand meets low inventory, home prices will appreciate. Last year, 2020, we saw it at a faster than usual pace, averaging around 7% nationwide. For 2021, experts project that we will continue to see appreciation just at a slower pace that's reflective of a more balanced market. While some may be worried that the rapid acceleration of home values means we're heading for another bubble, remember that we are coming off severely depressed prices from the mortgage crisis. In essence, a big part of this appreciation we can attribute to just getting back what we lost. With the end of the pandemic in sight, experts expect inventory levels to rise and home prices to appreciate at a more steady pace. And then there's the never-ending constant talk of a foreclosure wave. Right now, the outlook is that foreclosures should not lead to price declines. There will be foreclosures, but nothing as severe as what we just experienced. The massive wave of unemployment that came along with the pandemic led many homeowners across the country to enter into mortgage forbearance. Homeowners that are coming off of mortgage forbearance are actually not a big concern right now. A majority either pay off their mortgage or is in some type of workout situation. There is a small portion that is in trouble and with no good possible outcome except a foreclosure or a short sale. We need to keep an eye on this. While unemployment is slowly but surely declining and ahead of expectations, it will be a while before we reach the pre-COVID levels. Because of this, I believe that we eventually see an uptick in foreclosures. However, experts don't anticipate this will lead to a foreclosure crisis like we saw in 2008. They also don't expect it to lead to a major home value depreciation that followed. Simply because you have high demand which should quickly gobble up any additional inventory, and also it's not looking like there will be an onslaught of foreclosures coming because unlike in 2008, homeowners now have equity in their homes and more than likely won't be walking away from that. So everything is rosy and clear skies ahead, right? Well, not exactly. Right now, real estate prices are rising because this pandemic and economic downturn has disproportionately affected the service industry or lower paying jobs, which are mostly renters. And speaking of renters, Harvard University's latest study on housing made mention of the fact that they are forecasting rental demand will go down. Look, it doesn't take a Harvard economist to figure out that millions and millions of unemployed workers means unpaid rents, unpaid mortgages, no consumer spending, government bailout, etc. And if this becomes more widespread, the human psychological response is to get defensive and scared, thereby further magnifying and accelerating a downward spiral in the economy. Eventually, this will trickle down, or if you will, trickle up to other parts of the economy if we continue this so-called great resetting of the world economy. This is where I believe the real estate market is very vulnerable. We have not yet felt the full extent of this pandemic when it comes to renters. Remember, there are lots of renters not paying their rents and landlords can't evict them because of the moratorium. If we see a wave of evictions, this is not only devastating for the renters, but the landlords as well. We will probably see a lot of renters moving and finding much cheaper places, whether that's close to their current work or further out with this whole work from home situation that we have right now. Hopefully for the Bay Area, this would result in more affordable rents rather than landlords ending up foreclosing in their investment properties. The other danger in the economy is the commercial real estate. Lots and lots of workers working from home means lots of office spaces that are becoming vacant. Again, in this instance, you not only have that particular office building being affected, but all other services and retail establishment that caters to those workers that are no longer there. This could be another case of a snowball effect into other parts of the economy. So the bottom line is that despite everything that happened this year, the real estate market not only survived but thrived, playing a big part in our economic recovery along the way. While the next 12 months are just as promising with interest rates expected to remain low, buyer traffic staying high, and inventory levels predicted to rise, we just have to keep an eye out for those people that are being left behind and make sure we bring them along. For our Bay Area market, I don't think we see that projected increase in inventory from sellers that are on the sidelines or from new homes from builders. The number of sellers that are on the sidelines are simply not enough to make a dent into the demand that we currently have. As for new builders, they keep building homes that are more geared to the upper part of the middle class, while people are actually clamoring for affordable housing. So the reality is that the problem, if it is really a problem, is that people are looking for cheaper housing. Because if the Bay Area was truly unaffordable, there won't be buyers lining up and bidding up all these homes. Hey, thanks for watching, guys. We get a lot of calls from buyers and sellers moving in and out of the East Bay. If you're thinking of moving, give us a call, a text, or an email, and we would love to partner with you on your next move.